Good evening, everyone. I hope all are doing well, and we also had a fruitful weekend. So I want us to start. Tonight I want to put this thing. Those ones who are late, they will forgive me tonight. That saying of African time, it will change tonight because I still have a lot of things to teach. So delaying it will also cost us time. So thank you very much for taking your time to be in this platform. And we want to continue the subject with the start, the issue of cost revolving around the estate. So I just want to, okay, let me sort this one is looking for a link. Just a minute, guys. I just want to send someone a link. Then I'll come back to now. Okay. Okay, so now you're back. Thank you very much again, and apologies. I wanted to send someone a link to join. So last time we spoke about the types of taxes because it form parts of the cost which are around an estate. So there is something which I've paid attention to when it comes to the type of taxes which I spoke about um, in terms of property rental income tax. I mean to say that there are systems that one can engage to or one can use in terms of tackling these taxes. So it's up to you as an individual. Um, do you want to place systems which are going to assist you? You just want to roll it like that. So, but I believe because they are allow deductions, which I've explained, we have the municipal rates, and taxes. We also have bond interest, and we also have sorry, home building insurance. We also have rental agent commission, repairs and maintenance, and garden service and security. So looking at these allowed deductions, I think as I've said, in other cases you might discover that they are not applicable based on your location. Maybe you are in Soweto. Those guys, I believe, they don't pay the municipal rates and levies. So, but I think there are also some loopholes that one can use in terms of reducing the taxes. One of them, but it needs you to build a system. It needs you to build a system which can assist you to manage this. So, for an example, let's talk about issues of rental agent commission. You can build a system around that. Maybe you have a sibling that can be or can act as a rental agent. So that manages the movement there. So whatever income that goes to your sibling, it will help you to reduce those costs because it won't be counted to the annual tax which you are subjected to. Or you have, in terms of garden service, it depends also what type of a property you have. Because if you talk about back rooms, they don't have things like garden services. Security can also form something. I know some of you guys, you have siblings or uh, whatever who is running a security company. You can also build a system around that because the main aim at the end of the day is to make sure that you reduce the type of tax that you have to pay at the end of the year. So what you need to do in simplicity or in short, find alternatives, legal ones, which are going to use in terms of this allowed deductions, and say, okay, these I can have a sibling can manage this I can use so and so's company as long as that person is in my circle. So that at the end of the day, when it comes to paying the taxes, your taxes are low. And then I gave an example in terms of how you're paying these taxes. So you have to follow through because you know that your total permissible deductions are the ones who are going to determine what is it that is left at the end of the day. So whatever is left at the end of the day, it will be the determining factor based on the system which you have built to control the system. I mean, to control higher taxes. So it's up to you as an individual or with your financial planner on how you guys are going to build systems. Remember, the reflection of these amounts, number one, they must reflect on a bank statement. Number two, there must also be proofs of these. If you use some invoices, then the invoices must be then. You need to make sure that you keep those invoices, because once they come, they want to see those invoices. They also want to see the reflection of these amounts from your bank statement. So you need to make sure that if you build that kind of a system, you keep all paperwork clean. So it's critical that you find whatever it can be, a software or whatever it can be, use it in terms of keeping your information and make sure that you reduce your taxes. Because remember, the more you earn is the more you're going to pay taxes. So if you have something like not friends, because you can't talk friends, maybe sibling, security there, agent, one cannot act in as an agent there, to make sure that at the end of the day you don't count higher profit, you count lesser profit. You're just going to reduce your taxes. And then the day you understand that they take the whole amount and put it on a tax bracket. So if an individual who's earning more, it's also going to affect you, because if you earn more, also your tax bracket is higher. So you need to make sure that you deal with those things and you deal with them rightly. So now let's go to the cost. Now let's take now the exact cost which will be planted in your estate when you pass away. Because most of the time when we plan for our estates, we don't factor with the expenses which are going to be encountered when the estate is settled. We sometimes assume that no, the estate is just a matter of going to the court and then everything is done. But there is a huge process regarding this issue of settling an estate, and there are costs that are around settling an estate. So these costs, they are classified in categories. So I'm gonna list this cost, and you'll keep my recording, because one day your children will need information like this one, or you'll keep the notes, or you'll just grab everything I'm going to say, then you'll teach your children, because they need to know such things. So at the end of the day, people sometimes complain, maybe saying, no, the lawyers who are involved, they're charging our money, or sometimes others can even take advantage if you're not informed of the cost that are going to be part of your estate. So they are classified in categories, and I'm going to break down to you. So number one, we have what we call statutory and administrative fees. So in the statutory and administrative fees, number one, we have what we called the executor commission fees. So the executor commission fees, according to the South African law, they are entitled to the 3.5% of your estate plus 15% of tax. So this is charged on the gross value of the assets. And in the case of marriage and community of property, it is charged on the joint estate. So the executor of your estate is entitled to 3.5% of your estate. And I understand this part that we prefer to put our siblings. It can be our not our siblings, I mean to say people who are related to us. It can be, sorry, our parents. It can be our siblings. We prefer to put those people. But with the administrative part of an estate, guys, I don't lie to you, it's too much work. Even myself, my father's estate is still winding there. And the person who's handling, unfortunately, is not, I don't see her, but she's part of my class. That's the advocate who's in charge of my father's estate to settle it. So I do know the information of this gold, this, but that in terms of administration work is too much, to the point that I also get confused sometimes, because there is too much work of administration that needs to be done. So it's critical that if you decide, because we have choices, guys, we are not bound to do things based on how others are doing them. We have choices. So if you decide that you're going to put an executor, maybe you put your mother or your father, you need to make sure that you tally that decision with a person who's on the law side, because they understand the law side. To tell you the truth, my mother can't settle my estate. because he's not informed in terms of everything that is included in the paperwork. And in fact, the paperwork, that's where you'll find a lot of work. So I need to make sure that when I put my mother, or I put anyone who's not informed in terms of law, there are people like Mpo. Remember Mpo is the one guys who told you about the estate and also the tax issues. That one is the person that you can trust because they're informed about it. They know where to go, they know who to contact. But if it's a person who's not informed, please make sure that you put that person as an executor of the estate, but with a person who's a legal person, a person who understands law, so that the person will be able to assist in terms of everything, the transactions that needs to be done. The person will be in charge of that. I understand that your mother will be there, or your father will be there, or any sibling will be there. But in most cases, you discover that they are not informed of the processes which are involved in terms of settling the estate. So the executor is entitled of the 3.5% of your estate according to the law. So you know that if my estate, the total overall of my estate is 20 million, then I know that 3.5% plus 15% of tax goes to my executor. So what is an executor? Because I want you also to understand this view. So this one is a legal representative of a deceased person estate. Their primary duty is to carry out the deceased wishes outlined in the will, because obviously there will be a will on the floor in strict accordance with the law. So even if they follow your will, they need to also to abide by the constitutional law, to follow through what the law says. So if it happens that a person dies without a will, interstate, then the court, such as the master of high court, will appoint someone to act in his capacity, often referred to as an administrator or an executor dative. So if it happens that you don't have a will, this is the decision which the court will take to distribute or to settle your estate. They will appoint someone who is not appointed by you. So that's why it's critical for us to make sure that we have our wills and our will are in order, and we make sure that we revisit our will if there are some issues that we need to sort out. So what is the role of an executor? The role of the executor, just imagine when you look at these roles, that's why you discover that maybe the person which I've appointed, if I appointed my mother or my mother, my father or my mother or any sibling, that's why you start to realize that this role or responsibilities that are upon the shoulders of an executor, my father or my mother does not have a capacity to do them. That's why now I have to tally the person with whoever I've elected as my executor. It is allowable to do that in your will. So number one, their duty is the reporting of the estate. So officially reporting the death of the relevant, to the relevant authorities, which is the master of the High Court, and also obtaining official letters of executorship which grant them legally authority to act. And so anything that is below 250, it can be settled on a regional court, but anything that is above 250,000, now it goes to the High Court, which now the process becomes more and more like draining sometimes, because we sometimes assume that we go to the court and then next week they're going to give us access to the whole thing, but it's not like that. It's a long process. Sometimes I don't know whether it's the issue of our courts, and I don't know why these things take time. Sometimes it can even take a year. Sometimes it can even take a year and even months upon that. So it's a long process. So that's why even your dependents need to have something in the meantime to live with while they are waiting for your estate to be settled. So these guys are responsible to report your death officially to relevant authorities, which sometimes the primary way is also to go to the Master High Court, so that they'll make sure that they have all the documents to settle your estate. Then the second part, which is their responsibilities to locate and safeguard your assets. So they need what they do, finding and securing and valuing all your assets, including your bank accounts. They are the ones, when you have that letter from the court, then it gives you access that you will go. If you are the one who's doing it, you'll be going to banks to ask, is my mom having a bank, or my father having a bank account? How much is there? So all of them, they're going to open that for you to say, okay, here it does have a bank account. This is the amount here, the amount there. But it will only show you the balance, but you won't be able to access the amount, which is there up until all papers are settled, and you have the access of the letter of authority to access everything that belongs to that person. So it's another duty. And then to go to real estate, they go to investments, they go to vehicles, to personal belongings. And remember, guys, last time when I told you, I said your pension fund does not form part of your estate. And also things like your life cover, those things, the life cover, as long as you have appointed the beneficiary, once you passed on, they have all the documentations they submit, then they are able to access that money, unless if you have nominated, because there is a way which you can use to take your life cover and direct it straight to your estate. So you appoint an estate as your own beneficiary. Then when your money comes, you have to go back and form part of your estate. But if you have appointed a person, an individual, then those individuals, they do have the rights to go and claim your life covers. It's simple, that one. It does not form part of your estate. So, and then the third responsibility for them is to open an estate bank account. So closing the deceased personal accounts and opening a specific bank account in the name of the estate to handle all income funds, and outgoing and expenses. So they are going after everything. They have to open an account which everything is going to be accessed in. And then the other issue is the issue of paying debts and taxes. And that's where sometimes when you think of this thing, that if I appoint this person to be the one who's an executor of my estate, does the person have the capacity to perform such duties? That's the question that you need to ask yourself. And that's where you see the part that this person will definitely need help. So it's up to you now to make sure that you work out everything while you're still here, because if you are not here now, it's going to be a messy business. I don't believe all people, they know stuffs like going to these creditors and verifying claims, and they don't understand side things. Then it's you who's responsible to make sure that if I'm going to put this individual, I have to put this individual with a legal person. One thing which I've learned also from wealthy people, I mean wealthy families, I meant to say, wealthy families, they normally do, you'll find them, they have their own guys or are focusing on the law side. They have their own guys who are focusing on the finance side, and then they form a team, these guys. So whenever there is something that revolves around that family, the whole team will come. Those who are dealing with legal things, they'll come and show up and deal with legal things. Those who are dealing with financial things, they'll come and show up with the financial things. And this is one of the things which I also push to say, for me to protect my legacy, I need such a setup, because it's going to be a huge thing just to just give it to an individual. It needs a team that is going to be the guiding force. It needs a team which is going to be there to make sure that everything is contributed rightly. So without these guys, sometimes it becomes a struggle, especially if whatever you're going to leave behind is going to be a huge of assets. It's not an easy thing to go by. It's not an easy thing to go by. So I understand these wealthy families. Why do they build teams around their own wealth? It's because they want to protect their wealth and they want to make sure that it is passed down to generations. So one of my goals is to build towards there. I'm not yet there. I have to build towards there, where I have a team of people. Obviously, I work with finance. I will work with them in the process. But in terms of handing it down, I will no longer be there. But these guys will be able to settle everything in my absence. So you have to think around that. Who's going to be responsible to assess the person whom we have appointed for this? Because as I've said, part of their duties is paying debts and taxes. So what are going to do, they're going to in the advertising the estate to creditors, because the creditors, all of them, they need to know that the person is normal, and then they close the accounts and they tell you how much needs to be settled, and verifying claims and paying off outstanding debts, and filing the final income tax and estate duty returns, because even if a person passed away, there is still a need to settle the final income tax. So even if you are dead, you still owe that bill of saying they have to settle the final income tax. So that one, it will be up to your executor, whether the executor does have a capacity to do that. If not, the executor is going to appoint a tax practitioner to do that on your behalf and to make sure that they settle everything to SARS. And remember, when it comes to your estate, the first beneficiary of your estate is SARS. That's the first beneficiary of estate. So the other duty of an executor is drafting liquidation and distribution accounts. So is going to create a detailed financial report of the estate assets, liabilities, and proposed distribution, which must be approved by the authorities and laid upon the public inspection. So let me just go back into the issue of paying debts and taxes. So now when you think of let's say you only have a life cover. When you think of a life cover now, you have to think of the outstanding in this way. Let's say you decide to take maybe you are in the property business. Now you decide to take a bond of 20 years. You know, when you take that, you need to make sure that at least you have what is it called, a life cover which is higher. For these reasons, the life cover should also think for your settlement of that bond, should also think of the necessities and the needs of your children. So, because if you don't think in that way, and then you discover that the money that you're having is not enough to cover everything. And the worst part is when most of your money goes to the outstanding debts, meaning your beneficiaries are going to be left with less. So you need to make sure that when you think of a life cover, you think of part of my life cover can be used to cover the outs. Let's say, for instance, I'm having a 10 million life cover, and all my outstanding expenses are around 3 million. Then I can just give a direction to say, if I pass on, just take 3 million for my life cover and make sure you settle everything. Then the remainder of 7 million is going to rotate like this and this and this. So don't think of it as to say a 2 million will be enough. Your enough should be calculated based on the needs on the table. Your enough should not be calculated by imagination. So the decision making in terms of life cover should be informed by your own reality, meaning all our life covers cannot be same here, because you are not on the same page in terms of responsibilities, or not on the same page in terms of the debts which you are carrying, or not on the same page in terms of where our kids are, so, and where they need to go. So you have to think within your own line. It's like you are running a race. You think within your own track. You don't go to someone's track. So now think of it. If it means you have to increase it, you can increase it. Then later on, you can still put it down. If now you know, okay, at this age, these guys can afford 1, 2, 3, 4, and 5, then I can reduce this thing. But at this level, you need to think based on reality. Are you going to are you going to have a need to increase it, or you're just going to keep it as it is, or going to minimize it? But in terms of minimizing it, is when now you have enough to back up your story, because your story need to be backed up with cash at the other hand. So you need to calculate everything based on your own reality. What is your reality currently? So your reality must form part of your planning, because your planning should not be that thing of assuming that 4 million will be enough, or and then you say 4 million will be enough. At the other hand, you have a 3 million that you need to settle. It doesn't make sense at all, because that 3 million, if they're settled on 3 million, then this cost which I'm talking about now, the 3.5% that go to an executor, and the other expenses which I'm going to mention, they're also going to form part of that 1 million which is left, which at the end of the day, it won't make sense. So please make sure, guys, that if you decide now to say, I'm going to take a life cover, or I'm going to increase my life cover, your reasons should be based on the reality of your story. So please make sure that you do that. Please make sure that you don't just assume. Like, plan based on reality. Plan based on where you are going, and the goals that you need to achieve. So that's why a life cover should have goals in it. It's no longer that thing of saying I have a life cover. A life cover should be taken with goals in it. Then the question which you need to pose now and write it, and you're going to think about it on Monday, is what is the goal of my life cover? What is the goal of my life cover? And you know your finances, guys. You know what contributions in terms of your pension fund. You know the other sources which you're having of income. So those are the things now which will definitely help you to understand what is your goal in terms of that life cover which you are having. So and the other responsibility is distributing of the assets. So once all debts are paid, okay, once all debts are paid, and the account is approved, the executor transfer the remaining assets and funds to the rightful beneficiaries. Which now a beneficiaries, obviously it will be your children. If you don't have children, then you know who's going to be a beneficiary. So after all the process, then the executor have now the responsibility to distribute everything based on what the will says. So still, we're on the stationery and administrative fees. The second fees which are having here on the statutory and administrative fees is the master's fee. So the master's fee ranges is around 7,000. So this is the maximum charge for all estates over 400,000. By the differ, not all master's fees are on 7,000. So they go like this. If the value of the estate is less than 250,000, there are no master fees. You don't pay any master fees here. So if the value, that's why anything that is lesser than 250,000 can be settled on the regional court. You don't need to go to the high court, can be settled in a regional court. It's just a simple process. So anything above 250,000 is go to the master. So the second evaluation which they use, if the value of your estate is between 250,000 to 400,000, a 600 fee is payable. Then if the value of your estate is more than 400,000, if it's more than 400,000, a fee of 200 rand for every 100,000, which is, and over 400,000 is payable up to maximum of 7,000. So the maximum threshold of the master's fee is 7,000. So it's going to depend based on the value of your estate. But for the master fee is 7,000. So the first one, the executor fee is 3.5%. The administrative, the master fee is starting from 400, 600 rand going up. The maximum is 7,000. So these are the fees, these are the charges which are going to be taken on your estate. So as I said, when you think of your estate, you also need to think through these factors of the cost of your estate. So still on the statutory fee, you also have to pay what they call advertising cost. So by law, the executor must place 2 sets of advertisement according to Section 29 and Section 35 of adverts in both the government gazette and also the local newspaper to notify creditors, and as this usually costs between 1,000 to 1,600. So some, they will say a times 2 advertisement is going to be 800, and 800 is going to be 1.6. So this executor that you have appointed will also need to advertise your estate to make sure that the creditors are notified, and even the people who are going to inherit your wealth are also notified. So this is going to be advertised, and then everyone will know. So then everyone will show up to the party to say, this person owes me this X amount, everyone, so that everything will be distributed according to the measures of law. And then they'll make sure that you settle all your responsibilities before everything is contributed to the guys which you have appointed as your beneficiaries. So this ranges around 1,000 to 1.6. And then we also have bank charges. So the executor is legally required to open an estate-led bank account to manage the estate funds. So bank services fee will apply for the duration of the winding up process, typically 600 or more, 600 rand or more. So we also have what you call postage purchase. So the master allows an executor to charge a nominal fee of correspondence, usually around 260 to 300 rand. So these are the fees that are involved. And if you don't know these things, you'll be like, now these lawyers are benefiting from me. They're charging my man. But this is the reality of the things that you have to go through when you settle an estate. And you have to be patient enough. Sometimes, not sometimes, you have to have a means of income if you are fully dependent on that person who passed away. Because the more the process grows, the more you will become impatient to think these guys, maybe they don't want to settle the estate. But that's how the things are, especially in our country. And even today, I can't explain why does it take so long. I understand the administrative work, but sometimes it takes too much long for them to settle it. So now we have the second category of the fees or the charges which you are being charged is called professional and services fees. So the first one, in terms of the professional and service fees, we have what you call the valuation or appraise fees. So if the master or SARS require formal valuation of assets like your property, your vehicle, and attributes or art, an independent zone appraiser must be hired. So these fees are regulated on sliding scale depending on the asset value. So the average is 4,000 to 7,000. 4,000 to 7,000. So if there is a means of valuation in terms of your assets, then it means that an appraiser must be hired. So that appraiser will charge around 4,000 to 7,000 for the evaluation. So it depends on the state of your estate. So the second fees in terms of, of professional service fees is what you call transfer fees for those of you who are owning a property. And so based on the value of property, the tariff is regulated by the Government Gazette and works on a sliding scale of 15,887 for a property valued at 500,000, and then to 42,718 for a property worth 3 million. So there will be an increase of 15% for each additional property transferred. So here, in terms of transfer fees of your bond properties, it will be based on the value of your property. So I can't definitely say they're going to charge you maybe 15,887. It depends on the value. So the example is that for a property which is valued at 500,000, you are looking at something like 15,887. And for a property that is worth 3 million, you're looking for something around 42,718. So, but there will be an increase of 15% for each additional property transferred. So you see how the line goes. It goes and it goes up, continues to goes up. So it depends. For those of you who are owning a lot of properties, then these are the things that you also have to think around in terms of the cost of transferring from you now to the new owner. So, sorry, we also have what we call the bond cancellation. So bond cancellation takes 15%. So the tariff is regulated as per Government Gazette and is based on the value of the bond. So fees begins at 5,400 for the first 100,000 and then increase in a sliding scale of 500,000 increment. So this is the sliding that you're going to slide through. So the fees are starting from 5.4 for the first 100,000, and then the increase in sliding scale of 500,000 increment. So the other fee is also the tax consultant fees, but this one is not a compulsory thing. So it's in this case, if the executor of the estate uses a tax practitioner to finalize the disease tax returns, they will charge a professional fee. So now it depends whether they're going to charge you per return or they're going to charge you per an hour, because they differ. So, but if your executor is going to execute also the tax issues, then there will be no need for you to pay for tax consultation fees, because that person will do it on the overall work which is going to charge you. But if it's going to hire someone outside, then it means that person has to, I mean, you have to pay the tax consultant fees. And then the tax consultant fees, it depends on the tax practitioner which you're going to approach. Are they going to charge you per hour, or are they going to charge you per return? Normally, the guys that I know, how we do it, charge per return, but it depends. Some people don't charge you per hour. So if your work is going to take more than 4 hours, they have to bill you. If it's, most of them, they start from 1.5 going up. So it depends on how they are charging their rates, how are their rates. So, but if the executor is going to take care of this part, then it means you won't be paying for tax consultant fees. So, and then we also have estate agents commission. So if a property must be sold rather than transferred to an inheritor, then the standard estate agents commission usually start from 5%, 7.5% plus VAT. So if that property is going to be sold out, then there will be a need also to pay for estate agents commission. But if you are going to keep it, then there is no need to pay for this also. So this, the tax and the estate agent, it depends on the state of the things in your will. So if the planning is not to sell the property, then you won't be able to pay. I mean, you won't be allowed. I mean, you won't be charged for estate agent commission. And then if your executor is going to do the whole taxing thing, then it also means you won't be paying for the tax consulting fees. It's up to you which one you're going to use. And then the third category of the expenses that you have to cover in your estate or in settling your estate is the taxes payable to SARS. So as I've said, SARS is the first creditor in first creditor in estate. So estate duty, I spoke about this, but let me repeat it because there are some things which I didn't mention. So you need to pay estate duty, taxes. So this is a wealth tax levied on the dutiable value of the estate. So the first 3.5 is exempt the primary abatement. So the first 3.5 million is not subjected to tax, but anything above that is subjected to tax. So now here's the part which gives advantage to people who are married and are going to transfer all their estate to their spouse, to the living spouse. So if a spouse inherit the value of their inheritance and also exempt, and the surviving spouse can inherit the deceased unused 3.5 million abatement, giving them up to 7 million abatement when they die. Let me explain this in simple terms. So if I'm going to drop everything to my living spouse when I passed on, then it means they won't be subjected to estate duty. They won't be paying anything in the estate duty. So since I've dropped everything to my living spouse, then they are going also to get the exemption, which it was on my side of 3.5 million, and then coming together with theirs, which is going to form 7 million. So when they pass on, the people who are, when the living spouse pass on later, then the inheritor who's going to inherit their estate is now having what you called 7 million, which is going to be excluded from the estate duty. I hope I have simplified it in a way that you understand it. Let me just try to repeat it in a simple. So if I'm going to transfer everything to my living spouse, and then they are not subjected to any estate duty, and secondly, they inherit that 3.5 million in terms of subjections, that 3.5 million which I was also given as a rebate, that I'm not going to pay anything from the first 3.5 million, but anything above that I'm going to pay. So the first 3.5 million, since everything is passed down to my living spouse, is going to be transferred to my living spouse. No, so now it will be my 3.5 plus the 3.5 of my living spouse, so that when my living spouse passed on, it's going to be 7 million. So now those who are going to inherit that, they are going now to have the advantage of exemption of 7 million from the tax duties. So meaning these guys, they will start to count from anything from 7 million. So they won't be subjected to estate duties. But it's only applicable to people who are married and they are going to pass everything to their living spouse. It's an advantage to them and also an advantage to their kids. So the remainder of the estate is taxed at 20%, up to 30 million estates, and 25% of anything over 30 million. So if my estate is above 30 million, I'm subjected to 25% of estate duty. If it's less than 20, if it's less than 80 million, I'm subjected to 20%. And then that 20% is counted after the 3.5 million. Then if it's my living spouse who inherit everything from me, then that one it will be applicable after 7 million. So which is a great advantage, especially for you guys who are married and then everything you're going to pass it to your living spouse. Is amen to that. So the second one in terms of taxes payable to SARS is what you call capital gains, the CGT. I spoke about the CGT. So that even in death, you still have to pay the CGT. So death triggers a deemed disposal of assets. So if the deceased own investment, second properties or businesses, this may trigger the CGT. So the estate is granted to special CGT exclusion of 300,000. But anything starting from that 300,000, you have to pay the capital gain. Even in that example where I said, if you decide to sell the property, if you sell the property is going to be subjected to the CGT. So the CGT will be decided whether your property was registered under a business or it was on a personal capacity. So that's how they're going to decide how much you're going to pay. So it is also, or also going to pay income tax. So the executor must file at least 2 tax returns or predate death return for income and while alive. and a post date of death return for income earned by the estate while it is being finalized. You see these two. The first one is for the amount which you earn while you're still alive. The second one is the one for the income earned by the estate while it's being finalized. So guys, by all means, SARS will always find way to tax you. They'll always find way to tax you. So they want to benefit from you. So if you see their SARS, there, so they form most of your estate. They form most of your estate. So you need to think of this cost, because all these costs that I've already explained is going to be taken from your estate, meaning it's going to reduce the value of your estate. So it's a question of then how do you prepare for this cost? How do you prepare for this cost? Number one, I've explained to you that you can use a life cover to special to settle the outstanding and also some of the things. But there is also another alternative, alternative that you can use, which I want to close with. So you can use this alternative, which you call it estate expense cover or estate liquidity cover. I don't know if some of you have heard about this or still something new. So there is something called an estate expenses cover or estate liquidity cover. So this is specialized insurance product and specifically designed to cover the legal and administrative cost of dying. So if I think banks like Nedbank, banks like Nedbank, I think it's ABSA if I'm not mistaken, they do have it. But what I love about them, they have included everything that they're going to cover in their percentages. Like the things which I've listed there, the executor fees, the transfer duty fees, all of those covers, they are included there. So it depends on which one you're going to use, because some may include other things which are not forming part of the other. So, but this cover, it covered the cost which I was talking about. It covers the cost which I'm talking about, but I'm not talking about the outstanding debts. That one is another thing that you need to set aside. But in terms of the cost of winding up your estate, this package covers everything of your estate. So how does it work? Instead of the general lump sum, this policy calculates the estimated cost of winding up your estate. So all the estimated costs, they can include the executor fees, they can include the master's fees, they can include the conveyancing fees for property transfer, taxes, and extra, etc. So it calculates all this cost. So and then making sure that all these costs are covered. So meaning if you have an estate expense cover, then your beneficiaries, they have no need to be paying for all the cost to wind up your estate. So now everything is covered on this cover. So what are the pros? Number one, the speed. The policies often pay out much faster than standard life insurance claim. Sometimes it's within 48 hours, providing immediate cash for initial expenses. So for all the expenses they are going to need, then they're going to use this life cover. I was listening. I just came across a video one day of that guy called Thibaut Tash. I'm sure most of us we know him. So he was talking about his estate. So he said, since my estate it has a lot of it has a big weight. What I did, I also have an estate expense cover, so that it will cover the cost for my beneficiaries. So I will avoid the issue of the cost coming direct from my estate. So all of these costs are going to go. So that's a good move, especially for people like him, since their estate is too big. So these costs are going to be covered if you have an expense, estate expense cover, or what you call estate liquidity cover. So it's up to you whether you want to use it, or you'll say, okay, it's okay. The money can be taken from my estate, or the money will come from my life cover. So now you have three options. You have the first option, which the money can be taken direct from your estate. The second option is to use a life cover. The third option is to use an estate expense cover. So it's up to which one you will feel comfortable. Well, also the issue is all, it's based on your own reality. It's based on your own reality. What is it that is up at work now? Do you think that that amount will be enough? Is if it is taken direct from your estate, is it going to be enough to cover the cost and also cover the needs of your beneficiaries. So it's up to you. You have to decide from that point of view. So the second thing is the direct payment. So some of these policies pays the service providers, like the executor, the conveying attorney, and directly taking the administrative burden of your grieving family. So these guys, they're also able to pay these fees direct to the guys like the executor that you maybe have appointed. The money can go straight without even rounding around your family, but you do have the rights also that the money can run around them, and then they're the ones who will be responsible to pay for everything. But other than that, they are able also to direct the funds to the people that needs to be paid. Everyone can be paid. You just give an order that when it happens, then all fees must be paid directly. There is no need for this money to go to my family. My family will just inherit my estate. But in terms of the cost, let make sure that everything is covered and sent direct. It's up to you how you wanna do it, but you are not limited to say, I want the money to come straight to their banks, or I want the money to go straight to the guys, the service providers. So the last one is the offense structure. Okay, they are often structured so that the payout itself does not extract the executor fees, unlike standard life policies that paid into the estate. So as I've said, it's up to you how you're going to give the order. The money, if you decide that the money goes straight to the service providers, that can be done. If they decide that the money goes straight to whoever you have appointed, the money can also go to that space. So if you feel like your reality or your state won't be able to allow you to take all these fees which I've included direct from an estate, then you need to have an alternative. As I've said, that one of those alternatives is to have a cover for your estate to cover all the costs for your estate, or to use a life cover, or the possibility would be like, instead my cover was 10 million, I'm gonna increase it to 13 million. So the aim is that at least the 3 million that is there can cover the cost and everything, then it's fine. The 10 million will remain untouched. It's up to you how you wanna play the game. What I wanted you to understand, guys, is that you have vast of options that you can use. So it's up to you which option you will feel like, okay, this one, it will be a good option for me and I'm comfortable with it. At the end of the day, what I've noticed about us black people, we don't want to move up until something happens. And as Sun Tzu said, that great warriors, they prepare for the battle before the battle starts. And Abraham Lincoln said, if you give me 6 hours to trip down a tree, I'm going to spend the 4 hours preparing my blade, and then the 4 hours to cut it down. So preparation is the great key, guys. So don't wait for that thing of say, okay, I'll do it. Procrastination is one of the killers of the important things that we're supposed to build in our lives. So one thing that I've learned about us, we procrastinate too much. I know I'll do it next month. I'll do. But the thing is this: for me, today is a gift. Tomorrow is a promise. I can't touch tomorrow. I don't know what will happen tomorrow. As I'm here for today. I don't even know. Now it's 1950. I don't know what's going to happen in the next 2 hours. But since I'm here, there is something that I can do where I am. But I don't have control for the next hour, but I do have a control for the minute which I'm having now. So guys, I'm humbly requesting you that put your house in order. For the things which I've shared, look at where you need to settle or sort out some issues. Like, okay, this one is not yet the right place. Let me go to start there. Part of your like your weekly routine, it is to make sure that everything revolving your estate, you make sure that you settle it is settled. For the sake of the people who are going to come after you, we don't want to be remembered as the people who have messed up the history, because most of the guys who came before us, they messed up the history. We are where we are, most of us today, because of the guys who have missed out. And then we are repairing their errors. And as Maxwell said, it is better to prepare than to repair. We don't want to be a generation that's going to build big holes for the next generation, and then their duty will be starting from repairing. Let them start from a place where everything is prepared, and let's prepare our guys who are going to take over our inheritance. Let's prepare them. Let's inform them. Let's have honest conversations. Let them know where are the things. Like, you know what, if something happened to me, go to my safe, go to my room. There is a safe on the left. The pin is t t t t. You know this pin, and then you hit the pin. Everything is there. The original wheel is there. This and this is there. So you need someone that you can also trust with such information, because at the end of the day, there are some things, no matter how private they are, there must be that one person that is disclosed to. So it can be your the person that you trust or your spouse, whoever it might be, but also maybe including your lawyer, that your lawyer knows where is your original will, because these are some of the things that cause conflicts, especially when you are no more. So you need to make sure that these things are known. So guys, I urge you that let's make sure that our houses are in order. Let's make sure that everything is in order. Let's sort it out. If there are some things which are left behind in terms of your estate, please make sure that you attend to those things this week. If it means there are things that you need to sort out in terms of increasing your life cover, or you wanna go and take the estate cover, do that as soon as possible. And the worst part is that the push that is there in the government, I feel like I don't know whether to call it a push or whatever it is, because government guys cannot be trusted. I think we are going to be pushed to a level where these guys are also going to increase the tax, and which when they increase the tax, it affects a lot of things. So better to do most of the things now, because we don't know what will happen tomorrow. We don't know the changes which are also going to come from these wars which are happening. So better to prepare those things in time, better to make some phone calls regarding all things that has to do with you, especially with your employer. Make sure that, okay, this one is not covered by the employer. How do I cover it? This one is not part of the employer. Make sure that all these details you follow through, and then settle them right, so that the guys who are going to be the inheritors of your estate, they don't struggle. Everything is in order. So let's put our house in order and let's work everything right. So thank you very much for tonight. I don't know if there is anyone with a question, then I can answer your question. And then if not, please consult with your attorney and consult maybe with your accountant, with your planner. I don't know, whoever it might be, consult with that person. Yes, Malachi.
Evening, sir.
Evening.
I just wanted to know, so this estate cover, can you only take it up with commercial banks, or is there other places where you can apply for an estate cover instead of commercial banks?
Yeah, there are other options. Like I think Discover is also there, and other entities that offer beside I just quoted the banks as an example, but there are also other options that you can pick from.
Okay.
Thank
Treasure,
you.
can I give you a shout after this meeting just for about a minute or so?
Okay, it's fine, not a problem.
Thank you, sir.
Thank you. Anyone with a question? And I don't want to leave anyone behind. Okay, I think all of us, we